Hi, how's everyone doing? My name is Frank Bunn, and today we're going to discuss the difference between strategy and how to trade, which is the skill of knowing how to trade and why you must know the difference. By the end of this video, you're going to know exactly what's going on and how you can figure out what you need to do in order to get consistent, because the process is not that difficult. Okay, so the first thing that we need to do is we want to define each thing. So the first one, we got strategy, and over here we also have the skill. So this is how to trade. All right. So strategy is simply a structured set of, it's a rule-based set, okay, of procedures that you will use to enter and exit the market. You'll be very clear about that. Again, strategy, a set of rule-based procedures for entering and exiting the market. All right. So how to trade, or the skill, what is that? That is understanding or knowing exactly how to second guess order flow. All right, how to analyze order flow in the content, which in this case is your price chart, so that you can intuit what is most likely to happen next. Now, the first thing that you see is these are two radically different things. A set of rule-based procedures and actually knowing how to second guess order flow. Okay, so what does everyone do? Everyone tries to trade a strategy. And they try to do it without understanding that they're going to need to know a lot more than just a simple set of rule-based procedures in order to be consistent, in order to be profitable, in order to be successful at trading. Nobody tells you this. And I've been teaching students for 10 years, and this is how I do it. We teach them how to trade, and then we adopt a strategy. Okay, so let's take a look. What we're going to do is, now that we understand that, we're going to take a look at a popular strategy. And this is going to be, it's going to be the bull flag. And you read about this everywhere. It's in all the trading magazines, or it used to be. All the patterns online, every stock trading pattern or chart pattern is always going to be the bull flag. And what it is, prices is rally into this area of consolidation, and then it looks like a pennant or a flag, and then they expect the breakout. Okay, so what do we have here? If we look at what's going on, we've got impulse right there. Okay, so the impulse which leads to the consolidation itself right here, and then we have, this is really important because this is expansion. Okay, also known as price rejection. All right, very important that we understand that. Impulse, consolidation, expansion, or price rejection. All right, now, so people that write about bull flags, it's all bull flags, it's like bullshit. I mean, it's the same pattern. They'll connect the line anywhere. They'll just call this, so this is a bull flag, and when price moves out over that, you buy. Absolutely no specificity, nothing that's helpful. And a lot of these breakouts, sometimes 70, 80% of them, depending on the overall context, will fail. So they'll move right up, and there'll be a big institutional reversal right in the way. That's a problem. And in order to understand that, you got to take a closer look at what the bull flag actually is. And so when we see this consolidation following the impulse, what you learn is that there's a whole bunch of important price action and order flow characteristics within that pattern that enable you to determine whether or not this is going to be a viable breakout. You can't just draw two lines on a consolidation and expect consistency. That's what all the books and the gurus tell you, and that's the problem. Okay, so understanding these order flow characteristics in there is how to trade. It is the skill. That's the skill that separates you from everyone else that's guessing at random price charts or chart patterns. Okay, so now that we understand that, so what we do is, now we take, once we understand, okay, so we've developed this skill set, so we understand how to second guess this order flow, all right, at the bottom of this pattern. So we can effectively do that. Now, then this idea of expansion or price rejection is what's going to enable us to get to break even 80% to 85% of the time, all right? So it's this key, these key recurring institutional patterns that come from knowing how to trade that enable you to use the bull flag as a strategy. Extremely important. That's going to enable you to get to price rejection, get to break even, and get consistent. All right, fine. So all of this, you can see how this comes together. So let's go back full circle to where we have strategy from the beginning, and over here we have trading skill. We know how to trade. Okay. So what happens is once we have this, this is the key that enables us to use any strategy that we would like. It could be the bull flag. It could be any type of technical trigger. It doesn't even really matter. What matters is we first understand how to second guess order flow, then move on to strategy. We can also, once we know how to do this, we can see, hey, what strategies work, which don't, which are going to suit our purposes. But this is an excellent example of how strategy without the know-how is going to get you random, inconsistent results at best. Okay, so that's the difference between strategy and skill. Why you eventually will need both, but most importantly, you're going to need to know how to trade first. You're going to need to develop that skill set first. Then you'll have choice about strategy. Okay, if you want to learn a lot more about this, you can sign up for my free training that I'm offering. The link should be in the description below the video. Thanks for listening. I'll talk to everybody soon. Have a good day.